Palantir PLTR. Now this one, wow, significant jump to the upside in price. How much? Well, shares are up $3, which is about a 13% move, Pete. The turnover, 64 million shares already. 43 million is normal. So this is a very, very strong report. People are pretty bulled up about the report, and for good reason. They're applying AI. They're growing faster than people thought. And this is I think, one of the real winners in AI for actually the use cases of it, Pete.
Yeah. Well, they've done a great job, John. And then you look at them fundamentally, that looks pretty solid. The balance sheet looks great. You have free cash flow of almost $560 million. That's also very good. And then you raise your guidance. Obviously, we talk about that anytime we're talking about earnings is, okay, it's great to see. Oh, they beat on the earnings? Great. They beat on the revenue? Great, which is exactly what happened with Palantir. They also had the great guidance. So with the combination of all of that, makes a lot of sense why you're growing, and you're also, again, near those 52-week highs, up about 11%. Pretty strong results, John, I think, across the board. I look at this one. The only thing, if I were going to point to anything that I thought was a negative here, it's a little bit stretched on the PE. And this is something that we brought up about Apple not long ago. Apple had been a PE, price to earnings. It used to be in the low 20s, call it 20, 22, somewhere in there. That stretched up towards 30, 33, something like that. Gets a little bit more expensive, in other words. That's kind of what we're seeing here. But everything else in the report is great. It does, I think that's the only thing I would caution people is the PE is pretty high still. So something to keep in the back of your mind if you're looking at Palantir.